Hello and welcome to my take on your Daily 5 for the 18th of December. I am Julius de Kempenaer and I'll be your host for today. I'm a senior analyst here at StockCharts.com and the creator of relative rotation graphs, or RRGs as they are commonly referred to. You can find my contributions in the RRG blog on the site, as well as on StockCharts TV, where I host Sector Spotlight every Tuesday from 10:30 to 11 a.m. Eastern. If anything related to sector rotation and relative strength has your interest, please check out these resources and even better, subscribe to them so you will get notified when new articles and episodes have been uploaded. Just so you know, I do enjoy the interaction with viewers and readers, and therefore, please make use of the comment sections below articles and videos, or simply drop me a message via email. But for now, let's have a look at 5 RRGs and what we can learn from them. So on the left-hand side, I have the first RRG that shows the rotation of various asset classes versus VBINX. And I especially want to draw your attention to the tails of the stock market, ITOT, and bonds, the government bonds, corporate bonds, and high yield bonds. The RRG already shows a very clear preference for stocks being on the right-hand side and all three bond-related ETFs remaining on the left-hand side and moving into the lagging quadrant. And that translates in a really strong relationship for stocks over bonds. And we have already passed a very important horizontal level a couple of weeks ago, and the rotation or the further rotation, the further preference for stocks is very, very clear. So that is a main takeaway on an asset class level for the US market. Now, the second RRG that I want to talk to you about is the one that shows the various maturities on the yield curve, on the various maturities in the bond market. And what we see here is that the shorter dated bonds are all concentrated in the leading quadrant, while the longer dated bonds are located in the lagging quadrant. What that tells us is that we should have a preference for shorter dated bonds over longer dated bonds. Longer dated bonds are going down in price, which means yields are going up. Shorter dated bonds may also be going down in price, but a lot less fast than the longer dated ones. So that gives us a preference for the shorter ended date of the curve. That type of rotation characterizes what's called a steepening yield curve. And that's what we see on the chart on the right, where the blue line is the difference between the 10-year and 2-year treasuries in the US. And we can see that after being inverted or negative for a very brief period of time, late 2019, the year 2020 is characterized by a rapidly steepening yield curve. That's what we see here. And you can see the interaction with the S&P 500, which is the black bar chart that is plotted behind there. Now, the third graph is the one that shows rotation in US sectors. The main takeaway for this chart is that I'm really interested to see what's going to happen with the communication services sector. That has rotated into the leading quadrant, which is a pretty good thing, and it seems to be holding up quite well. And that's what we see on the price chart here as well. You see that the price broke to new highs above $64 a couple of weeks ago, and we're holding up there. Where the RRG lines are both pointing higher, and what we really would like to see is relative strength breaking above this horizontal barrier, which will push communication services further into that leading quadrant. I'd like to be a little more careful with real estate. Real estate is rolling back into the lagging quadrant, and you can see on the price chart that especially the relative strength line, after it broke support, continued to move lower. That's dragging both RRG lines below 100 and pushing that tail into the lagging quadrant. And it looks as if XLRE will have a lot of trouble breaking above this horizontal level. The other sector that I think warrants some caution is consumer staples. You see a same rotation here, moving from improving back into lagging, usually not a good sign. And we see that on the price chart where it is having difficulties breaking higher, it's not following through, and relative strength is breaking to new lows below a horizontal support. That brings me to the fourth RRG, which shows the US in relationship to international markets. The US is right here inside the lagging quadrant, so it's underperforming the rest of the world, or majority of the rest of the world. At least it's underperforming the Dow Jones Global Index. Now there is a bunch of countries and that are doing a lot better, or have been doing a lot better. That's like India, the Kospi, Korea, and the Nikkei. Those countries have moved really, really rapidly. If you look at the individual charts, you will see that it looks as if it's just the beginning in terms of relative strength. What I do like here is, for example, Indonesia, which is powering into the leading quadrant. We have the price chart here, and you see that it's already a big move, and we're running into some resistance. But if you look in terms of relative strength, this is really a line that's turning around from a longer-term downtrend. And you see a similar thing with Korea, with the Kospi, that has clearly already bottomed out. Question is whether you want to chase that vertical rise or wait until it drops back. Having said that, maybe a better opportunity is found in Brazil, where you see the Bovespa index rotating from lagging into the improving quadrant and closing in on crossing over into lagging. And especially when you look at the price chart, it is pushing against a very major resistance level around 120,000. When that breaks, in combination with the turnaround in relative strength, I do think that Brazil could surprise us and powering into the leading quadrant. That brings me to the last RRG, which is the one that shows the relationship of various currencies. And what this shows us is that the US dollar is weakening pretty much versus all of the other G10 currencies. But what's really interesting is if you bring Bitcoin, the digital currency, into this chart, and what you will see there is that Bitcoin is flying literally off the charts. This is the one that we just saw zoomed out, and this is when you bring Bitcoin in. That is a super strong tail for Bitcoin. And you know why? Because Bitcoin is just breaking to new all-time highs, and this is a massive base that we're breaking out from. There's a gazillion targets that you can calculate from this chart. There are many ways to do it, but my educated guess, best estimate, is that it should be no problem at all for Bitcoin to go into the high 30s or maybe even 40,000 US dollars. The only question is whether it will happen before the end of the year or in the new year, or maybe even before Christmas. With Bitcoin, you never know. With that, I want to recap that all of this means that in the US, I prefer remaining overweight stocks versus bonds. In the bond allocations, I'm preferring shorter dated over longer dated bonds. In US sectors, I'm looking at communication services to outperform while remaining cautious with real estate and consumer staples. If you want to add some international spice to your portfolio, you can allocate to countries like Indonesia and Brazil. And if you really want to go out of your comfort zone, check out the chart of Bitcoin and see for yourself. Ladies and gentlemen, this concludes your Daily 5. Thank you for watching. I hope you enjoyed the show, and if you did, you know what to do. I'm wishing you all a very happy Christmas and a really good, healthy, and prosperous new year. For now, stay safe and be careful with your investments.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.